we're not an expert in gold, so I'll just put that up right up front. There's two. I asked the question. The 220-year view is it's a superior currency. Yeah. Is the way we look at gold. If you had an American dollar 200 years ago, it's worth about 1.5 or 2 pennies adjusted for inflation. And if you had that same amount of money in gold, you'd have a $1.75. So it's been like 80 times better over those 200 years to have that currency rather than have a dollar. From an investment standpoint, we're big on productive assets, and there's no interest, there's no dividends from gold. Therefore, within the context of being an equity portfolio manager, it's really not on our radar screen.
Central banks have been buying gold for most of the last decade as well. So buying gold as a diversified asset isn't a new story as well. And then they still account for, I think, mid-teens pretty much of world global demand every year as well. A lot of central banks are under a vast amount of pressure now. Of course, they want to diversify, but a lot of these central banks that have been leading the charge on the buying, whether it be the Russians, whether it be the Chinese, whether it be traditional buyers like India, what have you, they could well see an abating of their ability to buy gold, given their straitened financial terms at the moment as well. Bear in mind, we've had this trend lasting for 8 years. Is that trend going to be such a support going forward as it has been looking back?
I think it is, but I think the more key support is the investment base, and you see a lot of the futures market positioning is very strong at the moment, and that needs to hold up if you're going to see a leg higher in gold.
So speculators,
speculative positions, yes.
Yeah, rather than real end demand.
Investors.
Yeah. Well, one thing I'd like to add to one of the things you mentioned, at least the United States experience is we dramatically expanded the money supply, but the velocity of money's fallen off a cliff. Which again, and going back to our previous conversation, we think that 30 to 35-year-olds are going to set interest rates in the United States, not the Fed, because what will happen is the only way rates are going to go up is if it's demanded. And if the velocity of money starts to go up, there could be some significant inflation pickup ultimately in the United States.
Which this point's going to come out of nowhere because there is no sign of inflation anywhere on the horizon.
No, that's right. Core inflation's rising, and seeing the link between their two mandates is wages, prices, and employment. Wages are rising, and when you've got a jobs market that's pretty strong, it was softer than expected on Friday, then I think that sort of gains momentum.
What at some point this year, mid-year, we're going to get the base effect from energy as well, so you are going to see a pickup in inflation just as a result of the...
You're already seeing those base effects come through.
So I don't think we should deny that, but what about positioning then? If we go back to what you were saying about speculators, what does ETF positioning tell us at this moment in terms of the possibility for a further rally?
Yeah, it's very strong. We've seen nearly 2 billion in just net inflows this year, and only 2 weeks of outflows out of the whole of 2016. So investors are really on board, and it's not just the futures market which is seeing strong positions, but and not just the speculators, but the end investors. And ETF demand is becoming a greater catalyst for price driving.
Do you cover silver?
Yes.
Can I just ask a quick question on silver?
Sure.
Because as excited as we can be about gold, actually, you've got the industrial kicker here too, and actually in the last 3 or 4 weeks, silver's actually outperformed gold in terms of the price performance that we've seen. So what are your thoughts on silver here?
Yeah, very much so. And so our view is there's going to be modest upside in gold, but those industrial precious metals, silver, platinum, palladium, are going to outperform, especially in the environment where the cyclical upturn is going to continue. And you mentioned the industrial kicker. You've also got decreasing supply from mining capex that's been going on for about 12 to 18 months, and that's when you start to see the supply side. And all three of those metals, silver, platinum, palladium, have been in a deficit for 3 years, and it's likely to continue this year.